Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these videos is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got quite a bit of economic data to go over in the form of PMI, and PMI is Purchasing Managers Index. And the reason why I like this particular index the most is because it's forward-looking. It gives us insight into what the managers are thinking going forward with due respect to the economy. So most are lagging indicators. Something like the unemployment numbers are all lagging indicators. It's what's already happened. This gives you an idea as to what's going forward, what these guys are thinking the economy is starting to do, and they're trying to ramp up production or pull back on production going forward. So PMI being the Purchasing Managers Index, we've got manufacturing in Europe at 48.6, which is slightly above the 48.1, which is expected. But remember, with these PMI numbers, 50 is the watermark. So anything above 50 is expansion. Anything below 50 is still retraction in the economy. We also got the French services PMI came in at 50.3, was expected 49.6, so it popped above that threshold there. We had German flash manufacturing PMI come in at 53.7, was expected 53.6. We also had the services PMI for the German economy at 54.6, was expected 53.3. And then we got Great Britain's manufacturing PMI came in at 49.1, just slightly below that threshold of 50, but it was expected 47.8, so much better than expected there. But on the services front, came in lower than expected at 47.4, which was expected at 48.9. Italian retail sales beat estimates, coming in at 0.3%. And then Canadian CPI came in line with expectations, and core retail sales for the Canadian side came in at 0.9 versus 0.3, so better than expected there. Here in the United States, we also had our own flash manufacturing PMI, came in at 52.9, higher than the expected 51.9. So we are above that expansion area, so looking good there. That particular data point for the U.S. caused the market was the catalyst, as far as I can tell, for the equities to start to move higher. On to crude oil. As you can see here, /CL, it is down on the day just slightly, but as you can see, pushing a little bit lower, not quite $1 lower on the day, but getting below that magnet that I've been talking about. It's starting to look like the bulls are starting to take control here in this market. On to gold, which is /GC, down on the day as the equities are pushing higher. It's going to be bearish for gold. People are going to pull money out of gold and put it into the equities. Bonds are kind of bucking the trend here. They're pushing a little bit higher, up 12 points on the day, despite the fact that the equities are pushing higher. They were a little bit higher once the equities started gaining a little bit of traction. They came off a little bit there. On to the equities. This is the NASDAQ, which is /NQ, up 18 points on the day, right there at the highs for the most part. We were starting to come off earlier, but like I said, when we got our manufacturing PMI here in the States, it really caused the catalyst, or it was the catalyst to get the markets rallying. E-mini S&Ps, which is the ticker symbol /ES, up about 5 points on the day, as you can see here, near the highs of the overall market. As you can see here, this is the breakdown of the 15-minute, or on a 15-minute chart of the daily E-mini S&P. As you can see, we are just off the highs of the day, but right here, right around 6:45 my time, which was 9:45 Eastern, the overall market saw that data point and rallied to try and test the highs of the overnight session. On to a few things that I've done. Deer, I covered my deer position I had on the August 80 puts, and I originally paid $1.60 for them, sold them out for $2.45. Why is Deere down so much on the day? Well, they came out and announced that they are going to lay off about 120 manufacturing employees in the Moline plant there. That is because they are seeing that they are going to have weaker sales than they originally expected. They don't see a lot of farmers coming out and buying any products, and don't expect them to do that anytime soon. So that has pushed Deere down quite a bit on the day, down over $2 on the day. All right, on to the earnings trades that I did. I talked about this yesterday in the daily market commentaries. In Visa, which is ticker symbol V, I had on the July, sold the 75.5 puts and the 81.5 calls to create a strangle. I sold it yesterday for 71 cents, bought it back this morning for 9 cents. So got that volatility crush that I was looking for. I talked about it. I've actually done a whole course on it. So you guys should check out how important it is to take advantage of that volatility crush. I mean, despite the fact that Visa did not have a really high implied volatility percent going into this binary event, the fact of the matter is once the binary event's done, you're going to get that volatility crush. I go into how to figure out how much you are going to see come out of those premiums all the way down to the right location to put those trades on. So check that out at protraderstrategies.com. And then in CMG, this was a big, huge win. It was well inside the expected move of 30 points was the market maker move, and it was well inside of that. I was even able to go quite a bit outside of the market maker move because the volatility was pumped in there. Once we got that volatility crush that you can see right down here, that was what really allowed this trade to happen rather quickly. And I did the July, sold the 360 puts and then the 465 calls to create that strangle. I sold it yesterday for $2.80, bought it back this morning for a dime. And so that trade worked out really well. Chipotle up on the day, but like I said, inside that market maker move. And these earnings trades, we're right in the thick of earnings. If you haven't watched the earnings trade webinars, then you are doing yourself a disservice. I mean, you are going to be losing money left and right. I go into all the details as to how to set these up for the highest probability of success. I mean, I can't do any more. You can lead a horse to water, but you can't make it drink. I mean, I can give you all the tools to make you successful, but in order to do that, you have to educate yourself. And that's what I've done with all of these webinars to increase your probabilities of success. I mean, I've gone through this earnings season and not had a loser yet, knock on wood, but the probabilities that I've worked out are well in my favor now. So check that out at protraderstrategies.com. I can't tell you enough how important knowledge is. I mean, knowledge is power, right? And then on to the eBay trade. eBay is an opening trade right now. They beat earnings. They've done really well. It just seems like it's a little overextended to me. I'm the contrarian. Look at this rally that we've had going even into earnings. After the earnings, we got this gap higher. I just have to think that people are going to start look to cover some of these longs and take their profits. It's just a little bit overextended to the upside, and volatility is, as you can see, flatlining. And in that case, that's when I go to look to buy strategies. And so I went into the September, so I skipped that August to go out a little bit further, give me a little bit more time to have this work out and not really get that theta decay to my premium. and I did the September 29 puts, and I paid 47 cents for those. So I'm looking for it to come down and at least test this area right in here, right where we gapped up to. So we'll have to see how that works out. But again, I needed to add a couple of trades. There's just not a whole lot of implied volatility out there other than for the earnings trade. And thank goodness for those earnings trades, because otherwise there would not be a whole lot to do in regards to trying to take advantage of volatility crush, which is one of the most important things that I look at for a trade setup, and especially for earnings. So if you aren't familiar with that, want to do a little research, go to ProTraderStrategies.com, sign up for that volatility crush webinar course, and then also while you're there, check out the earnings trade setups, because that is super important right now, because we are right in the middle of all of these earnings releases. So that's going to give you a lot of opportunity to sell some premium and make some quick cash. All right, that's about all I got for you guys today. Have a great weekend, and if you can't take that, take it easy.